We spend a lot of time looking at those fast-moving disruptors.
Yeah.
But what about those companies that have been around forever and are now trying to change everything?
Yeah.
Today, we're going deep on General Motors,
Ooh.
a company with over a century of history, but now moving toward a future of all electric and autonomous vehicles.
That's right. It's not just a car manufacturer at this point. It's a foundational player in this industry that's completely redefining what they do.
Yeah, and for you, our listener, the goal of today's deep dive is to really get to the heart of what we need to consider when we think about investing in GM.
Yeah.
Balancing their traditional strengths with this huge transformation that they are attempting.
Absolutely.
To do that, we've gathered a bunch of different sources, everything from GM's own reports to market analysis, financial data. Think of this as a shortcut to understanding what is driving GM's position today and what their potential is for the future.
Yeah.
By the end, you'll have a much clearer picture of what's going on with this company.
So in this first part, we're going to build a solid understanding of how GM operates right now. Then we're going to take a look at the leadership that's guiding this transition. And finally, we'll check out the company's financial health to see where things stand.
So let's start by understanding the basics of their business.
At its core, General Motors designs, builds, and sells vehicles.
Right.
That's everything from trucks and SUVs to cars and the parts that keep them all running.
Right.
These are sold under brands that we all know: Chevrolet, Buick, GMC, and Cadillac.
Yeah, brands that have been on the roads for generations.
For a long time.
And it's those vehicle sales that are really still the engine of GM's revenue, right?
Absolutely. In 2023, 72% of their $147 billion in revenue came from selling vehicles both here in North America and internationally.
That is a huge chunk of their revenue.
It is, but it's not just the initial sale.
Right.
GM Financial plays a huge role.
Right.
They offer financing and leasing for customers.
Yeah.
And that brought in over $1 billion in earnings in 2023.
So they're really tied in with that financing arm to get those vehicles moving.
Absolutely.
Beyond the financing, they've got other ways of making money that people often forget about.
Yeah.
After sales services like repairs and parts,
Right.
fleet sales to businesses, even licensing agreements for some of their technology.
Yeah.
It's a bit more diverse than just selling cars.
Yeah. And what's really interesting is how GM is strategically building entirely new ways to bring in money for the future.
Okay.
The big move into EVs, it's not just about the cars themselves.
Right.
They're developing charging infrastructure, the software that powers these vehicles, and that puts them in a position to tap into these growing markets.
They're in a good spot for that.
Yeah, and we can't forget the scale of their manufacturing operations in over 30 countries.
Wow.
They've got a global reach, which lets them cater to different markets all over the world.
Okay.
And potentially weather some of those regional economic storms.
So let's look at some of their key brands.
Okay.
Chevrolet.
Yeah. They're kind of all over the place, right? They've got their strongholds like the Silverado and the Equinox. But they're also pushing hard into that EV market with the Blazer EV, the Silverado EV.
Yeah, that dual focus is a big part of their strategy.
And Buick is trying to find that sweet spot between mainstream and luxury while appealing to a younger crowd, particularly in that huge Chinese market.
Absolutely.
With vehicles like the Envista, the Encore GX.
Yeah, that's strategic repositioning.
Then you've got GMC, known for those premium professional-grade trucks and SUVs.
Yeah, the Sierra Yukon.
They can charge a premium for those, which helps their profits.
Yeah.
They're jumping into the EV space while keeping that high-end image with the Hummer EV and the Sierra EV.
And then there's Cadillac, the luxury flagship.
Right.
They're not just coasting on their reputation.
Right.
They're redefining themselves through technology with luxury EVs like the LYRIQ.
Okay.
Trying to get a new generation of luxury car buyers.
So it's not just about their traditional brands.
GM is investing in the future of mobility as a whole.
Yeah.
Subsidiaries like Cruise focused on autonomous vehicle tech for ride-hailing.
Right.
That could be a game changer down the line.
Absolutely.
And then there's BrightDrop with their electric delivery vans.
Yeah.
Tapping into that growing demand for sustainable transportation for businesses. That's a smart move to diversify beyond just cars for individuals.
Absolutely. So zooming out, GM is a leading global car manufacturer.
Right.
A cornerstone of the U.S. auto industry, one of the big three.
Yeah.
And their 2024 sales numbers were their highest U.S. volume since 2019.
Wow.
Which really shows how strong their position is.
They're not just selling a lot of cars. They're leading in key segments.
Yeah.
They've been the top seller of full-size pickup trucks in the U.S. for 5 years in a row.
Wow.
And they've dominated the full-size SUV market for 50 years.
That's incredible.
That dominance gives them a really solid base.
It does. And with almost 6 million vehicles sold globally in 2024, they ranked as the 4th largest car group in the entire world.
That is huge.
And that kind of scale gives them advantages in sourcing, manufacturing, and just reaching those markets.
So when you consider all of that,
Yeah.
what's the core value proposition that GM offers to its customers?
I'd say it's about building those long-term relationships through those brands
Okay.
by always innovating
Uh-huh.
and being committed to the communities where they operate.
Okay.
They've got this big vision of zero crashes, zero emissions, and zero congestion.
Right.
And that really sets the direction for where they're going.
So it's all about sustainable transportation and that huge investment in switching to an all-electric lineup,
Yeah, they want to be at the forefront of this industry shift.
leading the charge.
Absolutely.
Now, a task like that requires really strong leadership.
Yeah.
Let's talk about the management team guiding GM through all of this.
Okay.
At the top, we have Mary Barra,
Yeah.
CEO since January 2014. When she was appointed, she became the first woman to lead a major global car company.
Yeah.
And her time as CEO has been full of challenges, but also big strategic moves.
What's interesting is that she took over right in the middle of the ignition switch recall crisis.
Yeah.
And now she's leading this transition to EVs and self-driving cars.
It's a lot to handle.
So that means needing those crisis management skills, but also a really clear long-term vision.
And she's also really focused on product quality.
Yeah. No more crappy cars.
Yeah. She wants to make sure they're building good cars. And she's focused on transparency, accountability, and ethical behavior within the company.
Those are important.
Yeah. Those are crucial for building and maintaining trust.
Absolutely.
And if you look at her track record, under her leadership, GM achieved record global sales and net income back in 2015.
Wow.
That shows that she can get results.
Yeah.
So if we're thinking about investing in GMM, what do we take away from her experience and leadership style?
I think her experience getting through that crisis, combined with her focus on electrification and autonomy, suggests that she's a capable leader
Okay.
and that she's looking out for the shareholders.
Right.
The emphasis on ethics and transparency just adds to that positive view of her leadership.
Okay, so we've got a leader at the helm now. Let's see how GM is spending its money under her guidance.
Yeah.
What can you tell us about their capital allocation strategies?
This is where you really see their priorities come to life in those financial decisions.
Right.
GM is putting a lot back into their core auto business, especially in developing electric vehicles, mainly through their Ultium battery platform
Right.
and in self-driving tech through Cruise.
And these are big investments.
Yeah, they're projecting $10 to $11 billion in capital spending just for 2025.
Wow.
A good chunk of that is for partnerships in battery cell manufacturing.
Okay.
So they're committed to building that EV supply chain.
Yeah, they're putting their money where their mouth is.
Exactly. And it's not just about factories and equipment. Right.
They're putting over $8 billion into research and development.
Okay.
That's so important for staying competitive in a market that's changing so quickly.
And it's not just about what they're doing internally. They're managing their portfolio of businesses too, right?
Absolutely. They're using mergers, acquisitions, and even selling off parts of the business as strategic tools.
Right.
To sharpen their focus and chase those growth opportunities that fit into their long-term goals.
For people who are interested in value investing, one of the big things they look at is how a company gives back to its shareholders.
Right.
What's GM's approach to that?
They've been actively returning capital to shareholders through some pretty big stock buyback programs.
Okay.
Recently, they approved $6 billion in February of 2025.
Wow.
$2 billion of that was immediate through something called an accelerated share repurchase program.
Okay.
That suggests that management thinks their stock is a good deal right now.
And they've also brought back and increased their dividends, haven't they?
They have.
Yeah. They restarted those dividend payments in 2022, increased them in 2023, and then again to 15 cents per share in 2025.
Okay.
That steady dividend growth shows that they're getting financially healthier.
Right.
And it's a real return for those who invest.
So how do they actually measure how well all these investments are working.
Yeah, what are they focused on?
Yeah.
One of the key things they look at is something called return on invested capital, or ROIC.
Okay.
It basically measures how well they're using the money they've invested to make a profit.
Okay.
And that gives us a really good look at how efficient they are with those capital allocation decisions.
So we've talked about the business, we've talked about the management strategies.
Mm.
Now let's get into the nitty-gritty of the company's financial health.
Yeah, let's do it.
What do the numbers tell us?
As of late March 2025, GM's market cap was somewhere between $46 and $47 billion.
Okay.
Their price to earnings ratio, or PE, is pretty low, between 7.59 and 8.11.
And that low PE is something that value investors really pay attention to, right?
Absolutely.
It can be a sign that the market is undervaluing the company.
Yeah.
But what else do the numbers tell us?
We saw some really strong revenue growth, 9.1% in 2024.
Okay.
That shows some healthy momentum on the top line.
Right.
Their gross profit margin for 2024 was about 19.4%, and the operating margin was around 13.8%.
Okay.
So that shows some solid underlying profitability.
But their net profit margin was much lower at about 3.5%.
Yeah, that big drop from operating margin to net profit margin is something we need to look into.
Right.
It tells us there were some significant costs or expenses hitting their bottom line in 2024.
Yeah, we need to dig deeper into what caused that decrease.
Absolutely. We need to understand what factors contributed to that.
Okay.
Looking at their leverage, as of June 30, 2024, their debt-to-equity ratio was 1.842.
Okay.
So that means they've got a lot of debt compared to their equity.
Yeah, a high debt-to-equity ratio can be risky, especially in an industry like the car business, which tends to go up and down.
That's true, but on a positive note, they had a record-adjusted automotive free cash flow of $14 billion in 2024.
Okay.
So that strong cash generation gives them some flexibility to manage their debt
Right.
and to fund those strategic moves they're making.
So taking all of that into account, how would you assess their overall financial stability?
Well, their earnings have been a bit volatile over the past 5 to 10 years,
Okay.
affected by the ups and downs of the economy and that big restructuring back in 2009.
Right.
They've improved recently, but that lower net income in 2024 reminds us that this industry is cyclical
Right.
and that those ongoing investments could have an impact.
But those dividend payments point to more stability, right?
Yeah, bringing back the dividend in 2022 and increasing it in the years since, including 2023 and 2025, shows that they're more confident in their finances.
Right.
And that they're committed to giving value back to those shareholders.
And how about their debt management? Are they moving in the right direction there?
It seems like it.
Yeah.
They've been working on reducing their debt since that bankruptcy in 2009.
Okay.
And that strong free cash flow gives them what they need to keep that going.
And what about their short-term financial health?
Yeah, how well are they managing that working capital?
Yeah.
Their working capital increased a lot from the end of 2023 to March 31, 2024.
Okay.
So that improvement in short-term liquidity means they're in a better spot to meet their immediate financial needs.
So the overall picture is that they've recovered and improved quite a bit since that bankruptcy,
Yeah.
with good trends in dividends and working capital.
Yeah.
But that big debt load and the recent drop in net income
Yeah.
are things we need to keep our eyes on.
Yeah, we'll definitely keep monitoring that.
So in the second half of our deep dive, we're going to explore what the market thinks about GM.
Yeah.
Look at who owns the company and do a full risk assessment using something called a SWOT analysis to put it all together.
Sounds good.
And just a quick reminder to you, our listener, make sure to subscribe to the Stock Analytics AI YouTube channel for more in-depth analyses like this one.
Yeah, and as always, please remember that what we're talking about today is just for informational purposes.
Right.
Don't take this as financial advice.
Yeah.
Do your own research before making any investment decisions.
We'll be back in a minute.
All right.
Welcome back to our deep dive into General Motors.
Yeah.
We've covered the business, the management, and the financials.
Uh-huh.
Now let's see how the market feels about the company right now.
Yeah, because market sentiment can really affect how a stock performs.
It can.
And at the moment, analyst ratings for GM are mostly positive.
Okay.
There's a general consensus of buy, which means they think it'll do better than the overall market.
That's good news. But there's been some recent news about possible tariffs on imported vehicles and auto parts.
Yeah,
That seems to have made things a little uncertain, hasn't it?
it definitely has.
Yeah.
These tariffs could hurt the whole car industry, including GM.
Yeah.
And that's led to more volatility in the stock price as investors try to figure out how it'll affect their earnings.
So even though analysts seem positive about the long term, These short-term trade concerns are making people a bit cautious.
They are.
What are those price targets from analysts looking like?
On average, they're saying GM stock price could go somewhere between 57.42 and 62.80,
Okay.
which would be a potential increase of 23 to 34% from where it is now.
That's a significant jump.
It is, but some analysts have lowered their price targets recently because of the risk that these tariffs could hurt earnings.
So it sounds like the overall outlook is still pretty good, but those external economic factors are creating some hesitation.
Exactly. The fundamental view is positive, but these trade issues are causing some adjustments in expectations.
Yeah. And when those possible tariffs were announced, GM's stock price took a dip,
It did.
showing how sensitive the market is to those kinds of trade developments.
Absolutely.
What about things like short interest and options activity?
Yeah, what do those tell us about how the market's feeling?
Yeah.
Well, short interest in GM is moderate.
Okay.
The days to cover ratio is around 2.84.
Okay.
So there are some people betting against the stock,
Yeah.
but it's not like everyone's super bearish.
Uh-huh.
The put-call ratio in the options market is about 1.09,
Okay.
which means people are a little cautious.
Right.
Slightly more put options, which are bets that the price will go down, than call options, which are bets that the price will go up.
So overall, it seems like the market is cautiously optimistic.
Yeah.
Analysts like the stock,
Mm.
but those tariff concerns are tempering their enthusiasm a bit.
Right.
We're seeing a little bit of a defensive stance in that options market.
Right.
Now, let's talk about who actually owns GM.
Okay.
Understanding the ownership structure can tell us even more.
Yeah.
So what's the deal with that?
Institutions own a huge chunk of GM, something like 86 to 88% of the shares out there.
Wow.
The big players include firms like BlackRock and Vanguard. When you see a lot of institutional ownership, it often means that those sophisticated investors have confidence in the company's future.
Makes sense for a company this big.
Yeah.
But what about the people actually running the company?
Yeah. How much do the insiders own?
Yeah.
If you don't count the UAW Retiree Medical Benefits Trust, insider ownership is pretty low, between about 0.2 and 10%.
Okay.
And recently we've seen more insider selling than buying.
And that's something investors tend to notice.
It is.
Yeah.
But we don't really know why they're selling.
Right.
So it's hard to say for sure what that means about management's outlook on the stock price.
Fair enough.
Yeah.
What about their corporate governance structure?
Yeah, in terms of accountability and oversight, how do things look?
Yeah.
GM's got a really solid corporate governance system,
Okay.
including an independent board of directors.
Okay.
They're the ones who oversee management.
Right.
And make sure they're acting in the best interest of the shareholders. Investors usually see a strong governance structure as a good thing
Yeah.
because it provides that oversight and accountability.
So the key takeaways here are that big institutions are invested,
Yeah.
insider ownership is lower, and there's been some selling that we need to keep an eye on.
Right.
And the corporate governance structure is well-defined.
Absolutely. Now, to wrap everything up, let's do that SWOT analysis.
Yeah, a SWOT analysis.
Yeah, we can get a clear picture of GM's strengths, weaknesses, opportunities, and threats.
Okay, a good way to synthesize what we've learned.
Yeah. Let's start with the strengths.
What advantages does GM have right now?
Well, they've got a really strong portfolio of brands,
Right?
names that everyone knows and trusts.
Okay.
Their their manufacturing is all over the world,
Right.
and that gives them some serious cost advantages.
Okay.
They're a leader in those really profitable truck and SUV markets,
Uh-huh.
and they're gaining market share in the EV space. Plus, they're investing heavily in future tech, like that Ultium platform, Cruise's self-driving cars, and BrightDrop's electric delivery solutions.
Okay.
They've got loyal customers. They've shown some recent financial strength with that revenue growth and free cash flow.
Right.
And they've made some strategic partnerships to help them innovate faster.
They've got a lot going for them.
They do.
Now let's flip the coin and look at their weaknesses.
Okay.
Where are they vulnerable?
Well, they really rely on the North American market for their profits.
Okay.
And they've got a lot of legacy costs, things like pensions and healthcare.
Right.
Having so many brands and models could actually weaken some of those brands.
Interesting.
And they've historically been really dependent on trucks and SUVs.
Yeah.
If consumer preferences change drastically, that could be a problem.
Okay.
They've also been a bit slow to adapt to changes in the market in the past.
Right.
And their structure can be kind of complicated. They can also be vulnerable to high production costs, and they've had some reputational issues in the past.
So there are definitely some areas that could pose challenges.
Absolutely.
Now, what about the opportunities out there that GM could capitalize on?
Well, the global demand for electric vehicles is skyrocketing.
Yeah.
That's a huge opportunity for their Ultium platform.
Okay.
Expanding into those emerging markets could mean big growth.
Right.
If Cruise can successfully commercialize their self-driving tech, that could open up completely new revenue streams.
Yeah.
More and more people want connected vehicles and in-car software.
Right.
That gives GM a chance to offer new services and subscriptions.
Mm-hmm.
Their focus on sustainability is in line with what consumers want these days. And governments might even offer incentives for people to buy EVs, which could help GM even more.
So lots of potential upside there.
Definitely.
What about the threats?
Yeah, what are the big challenges GM needs to overcome?
Yeah.
The car industry is super competitive.
Right.
You've got the traditional players, you've got those disruptors like Tesla and BYD, and Chinese manufacturers are becoming more and more prominent.
It's a crowded field.
It is. And if the economy takes a downturn, people might buy fewer cars.
Right.
The price of raw materials is going up, and there are still disruptions in the global supply chain, like those semiconductor shortages.
Yeah.
Environmental regulations are getting tougher, and those tariffs could make things more expensive and less competitive.
Okay.
And consumer preferences are changing, too. People are more interested in shared mobility.
Right.
And then there's the growing threat of cybersecurity risks.
It's a complicated situation.
It is.
Lots of opportunities, but lots of risks, too.
Yeah.
It seems like GM's success will depend on how well they navigate all of that.
It absolutely will. In this deep dive, we've looked at how GM's business model is changing.
Right.
The direction management is taking the company, their financial strengths and weaknesses, how the market feels about them right now, who owns the company, and the key risks and opportunities they face.
And we did all of this based on that variety of sources we mentioned at the beginning.
Yeah.
So you've got a really good overview of the company.
So as we wrap things up, think about this.
Okay.
GM has been around for a long time, and they're trying to make this big change to electric and self-driving vehicles in a global market that's incredibly competitive.
Right.
What do you think is the single most important factor that will determine whether they succeed over the next decade?
That's the question to ponder as you think about everything we've discussed today.
Yeah.
We hope this analysis has given you some valuable insights.
And if you found this helpful, please subscribe to the Stock Analytics AI YouTube channel for more deep dives like this one.
And a final reminder about our research and AI disclaimer.
Yes.
This is for educational purposes only and is not financial advice.
Right?
Always do your own thorough research.
Absolutely.
Thanks for joining us for this deep dive into General Motors.
See you next time.